Welcome, everyone. It's the Crypto Lark. I'm super excited today to have the chance to speak with Paul Brody from Ernst Young. He is their global blockchain lead. Paul, how's it going?
It's going well, thank you.
I'm super excited about this. Thank you so much for taking your time to sit down and chat with us. Remember, I learned about Nightfall earlier this year and I did a video on it. I was super excited about it. And so to actually have the chance to sit down with the global blockchain leader of Ernst Young, it's very exciting. And I hope everyone out there in the audience is very excited for this as well. But for anybody
I
who
wish everybody else was this excited to see me.
You're a rock star, man. You're a rock star in crypto land anyway. So let's start off with for the top level stuff. For in case somebody doesn't know about Nightfall, didn't catch any of my previous videos on it. What is Nightfall?
So Nightfall is a public domain set of tools that we released last year. Actually, I guess earlier this year. We built a prototype last year. We didn't release it. We built a sort of production system, which we released earlier this year. And the idea behind Nightfall is we believe it's very important for people to be able to transact in privacy on public blockchains. And so what we did with Nightfall was build a system that allows you to use a type of mathematical proof called a zero knowledge proof to transact privately on the public Ethereum blockchain.
Nice. Obviously, the ability to have privacy is very important because right now, if you know my Ethereum address, you can see everything that I do in and out, right? So what are the specific use cases you're looking at? I mean, when you built Nightfall, what did you have in mind? Who were the ideal customers for this product?
So the target customer for Nightfall is really enterprise users. So if you look at what companies try to do with each other, most of their big challenges today exist in the area of how do I as an enterprise transact with other companies, right? ERP, enterprise resource planning, systems like SAP did a lot to solve this issue of how do I organize myself internally? But for intercompany interactions, there really isn't a good set of systems available, and centralized systems are often ones that large companies are wary of because they don't want to wake up one day and discover that they are sort of their most valuable information is going through some really powerful central authority. So as a result, blockchains are great for companies, but if people could see, if you're a large retailer, if they could see what you're buying, how much you're paying for it, where it's going, that's an absolute non-starter, right? So doing all of your transactions in complete public on a public blockchain isn't going to work. Private blockchains give you privacy, but then they create this enormous onboarding problem, right? If I am a large company, as I always say, like when your largest customer calls and says, "Would you like to join my blockchain?" They're not asking, right? They're very politely telling you that you will be joining their blockchain. But the reality is the fifth company that calls you and says, "Can you join my blockchain?" Like, what was the point, right? How is that any better than, say, having to join 5 different extranets? So if you could have private transactions on a public blockchain, it would be a lot like the internet, right? We could transact in full privacy directly on the same system with all of our key competitors and suppliers. You'd have an incredibly powerful network effect. And so our belief was if we could solve the privacy issue at scale, we would make it possible for enterprises to adopt public blockchains and use them at scale.
Nice. And that public blockchain part is so important. And I think this was when I first learned about Nightfall is one of the things that got me so excited. You didn't choose to, well, we're going to build a private blockchain and say, hey, everybody can come use our private blockchain. You actually built on Ethereum, which I think is amazing. Now, why did you choose to go with Ethereum among all the other competitors that we see out there? There's 50, 100 different blockchains. Why Ethereum?
So a couple of different reasons for Ethereum in general. First of all, although we actually build most of our stuff today on private blockchains, we've always had the vision of public blockchains. And so one of the first things we thought about was, okay, if we're in the world of private blockchains today and we want to get to public blockchains, what's the story of how do we get there? When we talk to an enterprise CIO who's worried about privacy and security, right now today, maybe, or more accurately 6 months ago, if you'd asked them, hey, what do you want to get on? They'd be like, I can only do a private blockchain. If you build on Ethereum, and you architect yourself correctly, the odds of being able to migrate relatively smoothly in the future to a public blockchain are much better. So that was kind of one of the first key reasons. The second key reason is Ethereum has, depending on how you count it, something like 80 or 90% of all the venture capital. It's got like something like 80 to 90% of all the developers. Fundamentally, that is those are the hallmarks of platforms that typically succeed. there are always better technologies. And as I like to tell my team, I don't want to get sucked into debate about which is the best blockchain, because you can never win that debate. Somebody will always have something better coming along. Mm-hmm. What matters is, what we always say is, the winner in technologies is never the best. It's the one with the widest adoption. And so that's kind of where we placed our bets. And it gives us a path from private to public. And I'll actually share with you a really amazing data point. So we commissioned a survey by Forrester Research earlier this year, and we'll be releasing some of the data and the results later this week or early next week. But we asked people who built private blockchains kind of how many participants they had, what their issues were. It turns out the average private blockchain, other than the founder, has 0.5 participants.
That's crazy.
Yeah, but it tells you the story of adoption, right? There's too many people. Basically, for every one company that was willing to join a consortium or somebody else's blockchain, there were 2 companies that said, I got to control the network. I must have control of the system, so I'm going to make my own blockchain. Mm-hmm. And what everyone's coming to realize is that strategy doesn't scale. Not from a technical standpoint, but from a onboarding and collaboration and network effect standpoint.
What some of these companies are essentially saying is that they're going to go out and build their own intranet and then expect everyone to come and use their version of the intranet. And that's just, it's not what's happening. It's not the way that the cryptocurrency ecosystem is moving. It's moving towards building on public chains that accessible to everyone.
Right. It's not the way any ecosystem works. And I think the realization is really coming. 75% of the users that we surveyed said they thought their future was on public blockchain. So it's amazing. 95% of the enterprise blockchains built so far are private blockchains. 75% of the people we surveyed said that, of the executives in charge of blockchain that we surveyed through Forrester, said they saw the future in public. So in the last year, this kind of sea change. Everybody had to get to try private blockchains. They had to get that experience, and now they're realizing they've got to go to public in order to get scale and connectivity.
That's mind-blowing to see the gap between those numbers. That's really telling, actually, of where the money will be moving, I think, in the future. Now, you had a very big announcement today, which you want to talk about, and that is that it came out that Nightfall can do around 20 ZK transactions for around 24 cents or so on the Ethereum mainnet, which is wow, because anyone who knows anything about ZK transactions, they're notoriously slow and very expensive to do. So can you tell us a little bit about that?
Yes. So that was a big step for us. We knew, so about just a little bit over a year ago, we launched what we called the Opschain Public Edition prototype. And it was really just a prototype. We did a few ZKP transactions. We built like a prototype supply chain. It cost us an average of $100 per transaction, which, no surprise, is not very scalable. We turned that into Nightfall, which was a production system, and we got from about $100 down to $9. At $9, you enable a lot of use cases. And in fact, even at $9 a transaction, believe it or not, you are cheaper already than most private blockchains.
Wow.
But at $9 or $10 a transaction, it's still not enough to enable nearly all business cases. So the next step was to be able to batch transactions up together. We released the first version of our batching tool. It went out a couple of days ago. There's more stuff coming in the future, but that takes us to 20 transactions in a batch. And now we estimate 24 cents a transaction, but that is an extremely conservative estimate. That's at 5 Guai, assuming Ether is $200 an Ether. I would say realistically, the transaction cost will end up being more like 6 or 7 cents, right? We'll see after the Istanbul, the next hard fork comes in tomorrow. But my expectation is 6 to 7 cents or less on average per transaction. And at that price, we are cheaper than almost any conceivable private blockchain option.
Wow. I mean, at that price, it's pretty gosh darn scale when we start talking about, well, it's only 6 or 7 cents to do these private transactions. And when we start talking about invoices and stuff like this, it becomes very...
Purchase order, invoices, payments, good receipts. Our goal, and I hope that we will early next year be showing kind of a true end-to-end example of an enterprise, what you might call a full cycle enterprise business transaction on the public mainnet done with full privacy.
Why was there the decision to go with zero knowledge technology versus, for example, Monero's ring signatures, or we see Mimblewimble, which is sort of a new and growing technology? Why ZK?
Uh, Mainly, we thought it was the most robust level of privacy. I think if you're an individual user, you get a lot of semi-privacy from anonymity, right? You're one transaction, an enormous number. Your data is going in and out of maybe a big exchange. You throw it into a mixer. It's going to be really hard to figure out, what you did. But the truth is, with enough computing power, and if you do enough transactions, it's not really private. That's not true for enterprises, right? If you're a large company, you're doing a large number of transactions, we're very quickly going to be able to figure out who you are doing those transactions with. Additionally, we can't assume that all things are fungible. So in a consumer environment, if you're transacting with ERC20s, whether it's Ether or dollar tokens or whatever, no problem. Doesn't matter if your stuff gets mixed up. But what we want to be able to do is model a proper enterprise transaction. That's my money for your stuff, subject to some terms and conditions. And so to do that, we assume that in many cases, the stuff we're talking about are unique assets, right? And unique assets are ERC 721s, and you can't automatically throw those in a typical mixer, but you can give them privacy under zero knowledge.
Very, very cool. Now, something I want to bring in, I guess, around the topic of privacy technology is actually about auditing. So, I mean, obviously, code auditing is one thing, but what about companies that want to go at the end of the year and say, okay, well, we've got to audit all the transactions that we did on the blockchain? How does that then become possible with this kind of very robust privacy layer built in?
So what the Nightfall tool does is it allows companies to have transactions in privacy relative to the other companies on the blockchain. We're not trying to enable privacy from everybody, right? So your regulator shows up, the tax people show up, they have by law the right to ask you for data about your stuff, and we as auditors want to provide it. So when we launched Nightfall, we also updated Blockchain Analyzer, which is our audit tool, to be able to do proper audits for our clients. And what's really cool is mathematically we can prove using Nightfall when a client says, I did this or I did that, even though it's completely private on the blockchain and is protected under zero knowledge, we can prove to a regulator or to a tax authority that what the company is stating is verifiably true. And that's very useful. Now, it will change some things, right? So today, you can do a lot of traffic analysis on the blockchain. You can learn a lot just by looking at the flow of transactions. Under zero knowledge, a lot of stuff's going to go under a shield contract. And as long as it's moving under that shield contract, external parties are not going to be able to see. So the ability to sort of do some level of network statistics may be degraded, but the ability for auditors to report on what our clients are doing and meet regulatory requirements is not in any way reduced.
Very, very interesting. Yeah, it's obviously for big businesses, we start talking about how can they be totally compliant, right? Because they can't afford to have any areas around the sides where they may not be compliant in some way, and obviously a lot of concerns come into it, which is why Nightfall in itself is so gosh darn interesting, because you've kind of really ticked all these boxes. Now, I want to know, I mean, obviously the technology is very interesting, the way you build it out is very interesting, but who's using it, right? So what companies are actually using it right now or are planning on using Nightfall in the future?
So we will be using Nightfall. We are working on baking Nightfall into everything we do. And by the way, zero knowledge proof transactions are actually useful even in private blockchain environments, because in a private blockchain, you can have a state channel between two companies and you can have privacy between the two companies. But if you want, say, a token or an asset to move across multiple enterprises in the full view of all the members of the private network, but with varying levels of kind of compartmentalization of the knowledge, you actually have a really powerful use case for zero knowledge proofs on a private blockchain. Right now, our main case that's using this is a company called HSource in Canada. They are using zero knowledge proofs in a medical equipment marketplace. It's a private blockchain, but what it allows people to do is to prove provenance or the ownership of an asset without revealing who is actually putting up the asset for sale or for lease. We expect, I certainly hope, especially with this latest version of Nightfall, it's now going to be possible for lots and lots of companies to start adopting this on the public mainnet, and I hope we'll see some users early next year starting to bake it in. But you've got to keep in mind, we just hit that pricing threshold. It typically takes, if you think about an enterprise kind of product cycle process, it takes 3 to 6, maybe 9 months to go from kind of tools and components. It gets on the product roadmap. It gets put into production. So, if somebody said this is amazing and they started today, we'd see those products in 6 to 9 months. You'll see stuff from us a little bit sooner just because we've known what was coming for some time and we've been planning accordingly.
Very, very cool. Now, in terms of bringing companies in, what are some of the biggest, I guess, opportunities? You can expand a little bit on that, but also some of the biggest challenges for these companies when they come to you and say, "Hey, we want to, start using this blockchain thing. We heard a lot of good stuff about it." So, how do you get companies really on board with using public blockchains?
Well, there's two steps here. The first step is you've got to have a client who wants to use the blockchain, right? And I think 6 months ago or 9 months ago, people were like, just give me a blockchain. I don't even care if it's useful, right? And we're definitely past that stage in the market. We can see that demand for private blockchains has gone way down. I have $500,000, give me some kind of blockchain. That phase of the market is over. Where we're headed to now, the part that we're in now is a couple of things. Number one, show me a very specific value proposition, right? And what we are trying to do is really lead with very specific deals, like the work we've done with Microsoft around software lifecycle asset management, right? We cut cycle time enormously there. Food traceability, we have lots of those clients, and some of them are even on public blockchains. So specific value propositions, that's item number one. The second item is really talking to clients when we get there about public blockchains and the value proposition and the challenges, a couple of things. Number one, first, you start with the ROI. It's just at this point way cheaper to build on a public blockchain, right? And then secondly, and there are a few cases like food traceability or diplomas or educational certificates where it's actually much better to put it on a public blockchain. But most of the time, the thing that's important to enterprise executives is I need to coordinate process and I need to coordinate with transactions with my business partners, but it's essential that I have privacy and I really need worst case scenario kind of protection. Mm-hmm. And so the thing that we're talking to people about now is our next generation architecture, which we'll be showing early next year. And the key component of that is that our goal is that there will be no enterprise data at all on chain. So you and I will be able to transact if we're two companies, right? We'll be able to synchronize our process. We'll be able to have terms and conditions in the contract, but everything will be done under zero knowledge. All the logic will be hidden, and there'll be no actual data on chain. There'll only be hashes and links and proofs.
Proof that a transaction happened, but not what the transaction was.
Exactly. And even imagine the worst case scenario. Your company gets hacked. People take your private keys and they can decrypt everything you did on the blockchain. In that worst case scenario, they still won't be able to learn anything because all the actual data will be encrypted. It will reside in off-chain links like Private Swarm, and you'll be able to cut those links. So, you have to remember that in an enterprise world, they're very, very conservative in terms of how they embrace technology. Nobody wants to be on the front page about being the victim of a big hack. So the message we're trying to take to our clients is our architecture plans get you to just about as low a risk as you can possibly get, equal to possibly lower than your existing transaction infrastructure.
To what extent, when you have these conversations with these potential clients, to what extent are they worried about private key management?
That's a big issue. Private key management's becoming more and more important. Custody, advice the number of clients that we are advising on kind of the basics of custody, how to set that up is enormous, right? A lot of the really big mistakes that are happening on blockchain aren't happening because the encryption doesn't work or because there's something wrong with blockchain technology. It's because people are not securing their keys properly. They're getting hacked. They're not following reasonable best practices, and so that's a big issue. But the rate at which we're having those discussions is also telling us the speed at which people are maturing. One of the cool things that we have is really designed to reduce anxiety that some companies have, that everybody has about blockchain, is we have a tool called DiePack that we created. And we've not yet deployed it, but we're working on getting into sort of deployment ready condition. And what DiePack does is it uses zero knowledge to allow you to, it cryptographically tags your tokens under zero knowledge. So you can only do this if your tokens are under zero knowledge. but it cryptographically tags them. And if they are stolen, if your keys are stolen and people move your tokens, it functions like a die pack, like literally one of those, like, things that explode in a movie, right? It marks all the tokens as non-recoverable. So if that token
interesting.
entitles you to a bar of gold in a vault, and you try to retrieve that token, say, send me the actual bar of gold, they're going to be like, no, we see that token's been marked as stolen. And you can mark tokens as stolen, and you can issue replacement tokens to the rightful owners. So I'm very excited about DiePack. Between DiePack and we have another tool set it's implemented in Nightfall at the command line level. It allows for whitelisting, so you can limit the number of parties in your transaction flow, and eventually I think we'll be able to get to blacklisting as well. But you'll have regulatory compliance, you'll have control of your business partner, kind of the mix of those business partners, you'll have recoverability of tokens. We're kind of going to systematically check off the boxes of things that enterprise CIOs are going to worry about on the way to fully deploying on public blockchains.
Very, very cool stuff. Now, in terms of Ernst Young, and I guess their interest in blockchain, like how big is the Ernst Young blockchain team? Is it like a couple guys in an office, or are we talking about like a whole building full of a couple hundred dudes or something like that?
We're spread out all over the world, so we don't get to have a whole building full, but we have quite a few people. We don't disclose anymore how many people we have. I will say I feel very proud. I mean, we don't have a huge number of people. It's not gargantuan. I know there's companies that have some more people, but we have amazing people. We have really incredible people. I feel so delightfully stupid every day just sitting around, and I'm like, wait, can you explain that to me again? So it's a reasonably large team. We're in about 20 cities around the world. We have 2 offshore development centers. We've got an R&D lab. We have a platform team. So it's become quite mature. We have a security team in Tel Aviv. We are going to have a cool announcement about that in a few weeks. It's really fun. I'm having a really great time.
Lots going on. Yeah, it's very. I think that Nightfall is a testament to the good work of your team, to be honest, because it's such an amazing build for Ethereum. So yeah, they're doing good work. So kudos to those guys without a doubt. Now, just a couple personal questions for you, semi-personal, I suppose. It's still about blockchain and all that fun stuff. But what do you see right now as being some of the most important innovations happening in the decentralized finance area? And does Ernst Young, I guess, have any interest in any of those applications?
Oh, I'm very, very interested in DeFi. I think we have a little bit of, let's call it, cart before horse problem in the Ethereum world. So we have lots and lots of DeFi applications being built. We have lots of cool stuff like Maker, algorithmic stablecoin environments, invoice factoring, trade services. The problem is, there's not a lot of business transaction flow to finance, right? If you and I have a business transaction where I'm selling you something, you're going to pay me, and then you can have, in theory, in a world on blockchain, you could have financing against your purchase order. And when there's money owed, I could factor my receivables. So in theory, lots of digital services are possible, and DeFi is going to make that possible. In practice, I believe what's missing is the business-to-business transaction, the purchase order, the goods receipt, right? The tokenization of the physical assets, the receivables tokenization. Once those exist, the DeFi services can grow. So what I'm very much hoping is that as more and more enterprises adopt blockchain, right, that the DeFi ecosystem they'll really adopt privacy, because, by the way, enterprises are not going to touch this stuff without privacy.
Mm-hmm.
They'll adopt Nightfall, they'll adopt privacy, and then we will see these services latch on to the business transaction. So I'm hoping that we'll be able to enlist the DeFi ecosystem to drive business adoption through standardization. And as we get closer to launching our business applications for public blockchains early next year, I'm going to be making the rounds to a lot of the DeFi companies and hopefully talking to them about how we work together, right? I think we've done a lot to establish that we are committed to open source, to interoperability, and I hope they'll work with us to kind of standardize and tool that stuff up. I shared with my team a couple of great articles that I think are really worth reading in terms of getting a strategic picture on blockchain, and I highly recommend them to your viewers. One of them is a really old article in Wired. It's called Netheads versus Bellheads. and it's about the battle for the really beginning of the internet and the triumph of IP, and the battle that IP faced in terms of more traditional circuit switch and ATM and frame relay technologies. And it's eerily familiar, right? It's the perfect illustration, I hope, of that old phrase, if you don't learn history, you're condemned to repeat it. And then the second one is a more recent one by Cory Doctorow, which I think is fantastic. It's about adversarial interoperability. And it really talks about the fact that if you can have interoperability, you can have standardization without permission, you enable innovation. And it's this lack of permission, right, that is so incredibly important. I think you hear people talk about permission systems and you hear people talk about public permission blockchains. And the truth is, there is no such thing as permissioned innovation, right? There would be no Uber if they had to ask the taxi companies for permission to operate. And the fact is, permissionless systems with standardization and the ability to have truly adversarial interoperability, not always the stuff that the kind of big companies wanted, will be critical. And I hope to enlist the DeFi ecosystem in building that on a really robust privacy foundation.
Very, very cool stuff. I feel with decentralized finance, we're still at this really early stage where really exciting stuff is being built now. But when you kind of try to look around the curve a little bit more and see what's possible and you understand what exists right now in the financial world and what can be done with decentralized finance, it's very exciting. Very, very exciting what we can see coming in the next couple of years. Now,
completely agree. And I think the one other thing I would say is, the stuff that we are learning by just trying to do this is just unbelievable, right? We have a list of like 500 problems that we think we will know how to solve as we get through this. And I don't think where we are, we could even have understood all the issues to be solved without trying to actually do this.
Nice. And by the way, you're worth reading. You're one of my favorite new Twitter follows. I followed you a few weeks ago, and you share a lot of great articles. So there's definitely a lot of great stuff to be learned by following you on Twitter. So I'll leave the link down below to your Twitter for anyone who's keen on that. Final question for you: we see a lot of central banks bringing out digital currencies. I think France is the most recent one to announce that they're going to start testing of their central bank digital currency in Q1 of 2020. China obviously has been a big story. So where do you see these fitting in? Do you see them as a positive or a negative for the crypto economy overall?
They're a huge positive. I mean, I think one of the things that you learn very quickly when you talk to enterprise buyers is they don't want to transact in crypto. And it's not because they're anti-crypto. It's because if you're an enterprise, if your revenues are in dollars, and your costs are in dollars and you pay your taxes in dollars, if you have to switch into Ether or Bitcoin or some other currency for a major set of transactions, then you created foreign exchange risk, right? Because that could go up and your liabilities can go up and down. But if you keep everything in the same currency, then if the dollar goes up, your other stuff goes up. And if the dollar goes down, your other stuff goes down. So it's much less risky. And so enterprises want to transact in their traditional fiat currencies. They just want to do so digitally. So I think in general, this is kind of a huge positive development. All the companies that have created different kinds of stable coins and fiat-backed stable coins and asset-backed stable coins, they have paved the way for this. And the focus and attention that's being given to it now by the regulators, I think will mostly result in a very positive environment. Also because it's a competitive one, right? If this happens well, it will be a good example of how countries competing with each other to be the best place to do business elevate everybody's game. And I really hope, and I might be being, again, super naively optimistic, but I hope that that's what comes out of this.
Very, very cool stuff. Well, for anybody who wants some more information, I'll leave some links down below. But Paul, thank you so much for coming on today. It's been super, super interesting. What you guys are doing at Ernst Young with Nightfall is really amazing technology. So thank you guys for doing what you're doing, and thanks for sitting down with the community and having a chat about it.
Thanks for having me, and have a great afternoon.